Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Today we'll take a look again on the euro currency. Since right now on the euro currency is happening some interesting big shifts, not only on the daily and intraday charts, but on the monthly and weekly charts as well. So last time when we had taken a look on the euro currency, it was at the mid-January. So there was some discussion of the possible upward action, and as soon as the yearly pivot point has appeared around 111.40 area, our last conclusion that we have made in the mid-January that appearing of the yearly pivot point above the market is not really a good sign, because market will try to test it, and after that maybe the bearish trend will continue. So also in some daily updates that we have prepared, we have taken a look at this consolidation, and as close to this consolidation was to the final, as more bullish signs we have started to indicate here. Finally, when we saw this drop, recall that we have identified here the head and shoulders pattern that completes its target. So market has hit A, B, C bottom, 1618 extension here. But in particular, by this action, the first step of our analysis has been complete. So market indeed has touched the yearly pivot point and even has exceeded it, for approximately 200 pips. So that really brings on the market a lot of talks on the possible further upward continuation, and that was really strong euphoria in the market that probably euro currency could reach in high levels. But suddenly situation has changed, and you can see that in the last 2 weeks, market has fallen like the stone. So it's miserable plunge down right to the 108.30 support area. This drop, guys, significantly impact on the high time frame analysis as well. So if you will read our weekly research, monthly research, you will see that with the recent action, market is losing the bullish signs, the bullish patterns, and more shows the action that is not typical for the normal bullish market. That's why the upside potential and chances that market will continue move higher are melting day by day. And right now we're already starting to think about the possible taking the short position on the euro currency. Right now we will talk on the tactical situation that we have on the euro currency in the daily chart and the intraday charts. And here, guys, it's a bit tricky situation, because we would like to take the short position, but this possible taking is accompanied with additional risk, because bullish patterns haven't been erased totally yet. And it's some sort of the action like the cat likes the fish, but it also worries for its paws that it will be wet when it try to get it. So it means that our task here is to try to take and find such possibility to take the short position that will be accompanied with the minimal risk. And here what we offer you to do. First of all, let's take a look at a bit broad situation on the daily chart. So on the daily chart, in fact, we have potential regardless triple to sell pattern, because market has formed initial drop, ABC retracement after it, and turned to the downward action again. The target, the minimum destination of this regardless triple to sell will be around 106 area, because here stands 618 minor extension of this big A, B, C top, D pattern. And recall what we have said about 1050 area, guys. Recall what chain we have built on a possible breakout of this area. Once we have said this level will clarify everything, because 1050 is the daily confluence after the ABCD pattern. This is also the monthly pivot point for the March, And 1140 area right here is yearly pivot point. If market will drop below it, this will be the conclusion of the dropping that will lead market right to the parity. Because breaking of 1050 leads market to the 108. 108 is the minor target. Minor level. This is just the fib support 618. Yes, it's important, but it's not the confluence. It is not accompanied by any pivots or something else. So that's just the fib level. So if confluence accompanied by the monthly pivot wasn't able to hold the market, what chance that 108 will hold the market? If market will fall here, this dropping could really launch this ABCD pattern. This Gartner's 222, and failure here will lead market to the 106. 106 is just the target. There are no fib supports, no any other supports here. It's just a minor target, and it means that the market will be on the way to the 105 lows. 105 lows will be third time tested if market will return right back down. Besides, the AB equals CD target of this big Gartner's 222 will stand below these lows, and that will lead market lower. And particularly breaking through the 105 will lead market to the parity, because monthly and weekly patterns have there the destination point, the targets stands at the parity. This is easy chain of the dropping and of the levels, and some sort of the nested doll. When the market fails here, leads to the consequent failure on all other levels. That's why as soon as market drops lower, it becomes weaker. Here we have the retracement on the first touch of the 108.30 area. This fib support, this also was the weekly pivot support in the last week. Okay, and this normal upward action. But here, guys, it's a very important moment that take a look. If we will take a look at this bounce that stands on Friday, based on the Gartner's 222 sell pattern, it points on the minimal retracement, because here market hasn't touched any targets. This is just the support. That's why any deep retracement here will be not quite natural for the Gartner's 222, and if market really turns to the bearish action. Minor retracement, right, it could be. But too significant retracement, return right back to the upside right at the top, this will be a bit too much for the current situation. That's why we especially close should take a look at this retracement now. And here is what we would like to use for possible taking the short position. We will try to use the bearish momentum in this action and take the position that will have very good chances to save our money and simultaneously take part in a possible downward action. Particularly speaking, we will try to use the bread and butter sell pattern to possess ourselves on the way down. As you can see, on Friday, market has confirmed the bread and butter sell, Judd Napoli pattern. We have the thrust down. We have the two close above the 3x3 moving average, that's green line. And market on the second close above the 3x3 on the second session has touched the major fib level, 135 area. So bread and butter trade has been completed. Also, guys, I just remind you that this is monthly pivot point, and this consolidation indicates disrespected former confluence support that was here. So market just stands flat here with no respect and drop below it. Very often, as we said in Friday update, when market disrespected the confluence support, it returns right back up from the other side and retest this disrespected area. So right now this has happened. Right, market 1035. So we have all background in place for taking the short position based on the Gartner's on the bread and butter sell pattern. But still here exists some tricky moment, and I'll show you on our hourly chart. On the hourly chart, guys, at the first glance, it's everything okay. Recall what we said on Friday. Market should form some kind of the A, B, C bottom D pattern with starting with the 109 area. That was the 50% support of this thrust top. We have discussed this. You could just rewatch our video that we have prepared on Friday. And right now it seems okay that market really has completed it. So we can see that this top stands precisely at completion point 110.38 level. So ABCD has completed. So right now we also have an agreement with this fib level. What else do we need? But guys, here is some tricky moment. First of all, on the daily chart, on the Brent body pattern, as you can see, market still has one session in reserve to reach, for example, some high level. Because Judd Napoli tells that market should reach the major fib level within the 3 sessions at maximum. On the second session, market has hit major level, but what the chances that market will not reach another one on the last third session that's allowed to the Brent body pattern? For example, market could show upward action on Monday and hit the 50% level around 111, and this also will be the Brent body. Also, guys, if you will use not the blue ABCD pattern, but you will take the A point right from the bottom. I have drawn here, as you can see, red add-ons to this ABCD. It will lead you to some high levels, approximately 1060. That's the first moment. Second moment, guys, we do not have here any reversal pattern yet. So, for example, if we would have here some kind of the butterfly right at the top of the ABCD or something of that sort, this could become the rock hard support and confirmation of the starting of the Brent body. But here we would not have anything yet. Also, guys, take a look that the CD lag is very fast. So just minor reaction on the non-farm payrolls with great numbers. But when it's appeared that wagers have decreased for the 3 cents, this market has skyrocketed to the upside. Okay, this very fast CD lag. That could lead to the continuation to the upside. And for example, to complete some kind of the butterfly, maybe butterfly will be formed here. And this also could reach market or lead market to the weekly pivot resistance 110.11 and 110.90, and that's particularly will be approximately the 50% resistance on the daily chart. Why I'm speaking every time on the 50%? Because, guys, the euro currency 50% resistance, it's major level. So euro currency likes the 50% retracements. That's why it makes a bit tricky situation right now. So how we could take the short position? As usual, there's 3 possible scenarios how you could do this. First scenario, you could take the position here, but place stop above this area. This is the first way. Second way is taking the half here or any part of your position, 30%, 60%, as you would like. How you assess the probability that market will turn down here. Take some part here, for example, 50%. If market will continue to move high and reach 111, you could take another one. Maybe market, by the way, will form here some kind of the head and shoulders and will start the Brent body. That's also possible. Finally, the third approach is do nothing and just wait. If market will reach 111, you will take the position. If market will not do this and drop, you will try to take some position on the minor retracement. So you will drop your time frame to the 15-minute chart, for example, and will try to take the 3-8 retracement on this way down. That's also possible. These scenarios are different, and it depends on your skills, your experience, how you trade your risk risk management on your position. So here you will have to make your choice by yourself. Personally, I like the second scenario. That's some kind of the scale in. In the current situation, it seems possible. Well, also you could try to use the Judd Napoli minesweeper tactic entry. So when the trend will shift bearish on the hourly chart, you could try to take the position on some retracement now. This also, for those of you who are familiar with the Judd Napoli minesweeper entry technique, you could try use this one. But this, guys, is the sphere of entry tactic where you will have to apply your skills and your fantasy, so how you will do this. But in general, overall setup is in place, and we need to try to take the short position on Monday, because that would let us to take the position with the minimal risk, because Brent body is a pattern that has great chances to success. For example, if it will reach its target, and its target will stand at the 618 support of this action, here you could move your stop to the break-even and take, for example, for the half of your position and take the profit on the second half. In this case, as market will drop lower and continue to move down, you will be just in favor. Or if not, market turn to the upside, well, it's also very good, because you will have the profit on the half of your position, and you will leave this trade with no risk at the second half. That's why, guys, I think that we need to use this chance and trying to work with this bread and butter trade.